Everybody's waiting for mortgage rates to drop. Here's what nobody's telling you. The next Fed move might actually be up. Mortgage rates did improve this week, and the average 30-year fixed came in at 6.65%, down 2 weeks in a row. That's the good news, but here's the tension though. At the Fed's July meeting, 3 policymakers voted to raise rates, not cut, raise. However, inflation has cooled since then, and the jobs report was soft. New unemployment claims fell to 206,000, but continuing claims are sitting at 1.8 million. So people are still taking longer to find their next job, and that softness takes some pressure off of the Fed. Next Friday, new Fed Chair Kevin Warsh gives his first Jackson Hole speech, and the Fed meets again on September 16th. Now here's what most people get wrong. The Fed does not set your mortgage rate. Your mortgage rate follows the 10-year Treasury and mortgage bonds, and those move on where inflation is headed, not on what the Fed did last month. That is exactly why rates fell this week, even while the Fed is openly debating a hike. Now, here's the opportunity. Builders are hurting. Housing starts fell 12.4% in July. 35% of builders cut prices this month, averaging a 6% cut, and 63% are offering incentives. On a $450,000 new construction build, that is $27,000, and many builders will buy your rate down into the 5s with their money, not yours. Resale is soft too. Pending sales fell 2.3% down across all 4 regions. Less competition means you get to negotiate. Now, agents, that right there is your talking point. Fewer buyers, motivated sellers, and builder money sitting on the table. We're keeping an eye on oil as well, as that is the wild card driving rates right now. Gas is over $4 a gallon on Iran tensions, and that keeps inflation sticking around, and mortgage rates hate inflation. So hopefully the war gets sorted out sooner than later. Well, hope you guys have a fantastic weekend, and we will see you next week for another update.